Okay, hello everyone. So let's take a look at the week and let's do a wrap up. Let me put this up first. What I put in the members area. So what I said would be trade or swing days. Let's take a look. So this is June 8 to 12. Trade swing days. Gold, I said Thursday or Friday. Euro dollar Monday, Friday. Bitcoin Monday, Thursday, Saturday. SP 500 Wednesday or Thursday. Dow Jones Monday or Tuesday. Nasdaq Tuesday. If I got 2 days one after the other, it's Monday or Tuesday. All right. Sometimes Monday can be an up day and Tuesday can be a sell day as well. But you got to keep both days in mind. And I said the possible vector energy days. Gold Monday to Thursday routine. Friday is a gain day. All right, and remember we've got Thursday and Friday trade swing day. Euro dollar Monday, Wednesday routine. Thursday, Friday gain. Bitcoin routine week. Saturday, Sunday shock days. Now shock days can be up or down. All right, so be mindful. Shock doesn't mean it's a bad day or it's a sell day. Let's say SP 500 Wednesday or Thursday. I've got Monday drain. Tuesday to Thursday peak, Friday routine. All right, so let's see how that panned out. Dow Jones Monday or Tuesday. We've got Wednesday, Thursday shock days, Nasdaq Tuesday, and then we've got Tuesday, Wednesday, Thursday shock days. All right, so those days are going to be volatile. We've got to be careful. Let's take a look at the intraday timing windows. Okay, so you can just take a screenshot. Monday, that's what it looked like. Tuesday, Wednesday, Thursday, Friday. Okay, I've also put up a few videos on the cycle edge, so check them out because I will be putting stuff from there, asset specific stuff, in the premium members area. Okay, and next weekend also I'm going to be putting the prices up in the members area, but there'll be more to see, but the price will be higher because I'll be putting a lot of the stuff, and I'm going to open it up for everyone so people can be a monthly or a premium member. Premium members though will only see the technical analysis course and any course I might put up there. So let's take a look at gold. So what did I say? Thursday or Friday? All right, so Thursday or Friday I did say we could go up from here. This was a place to buy. Why? It was right in the middle of that zone, okay, where the market, as you can see, let's do this, let's pull back a little bit. All right, so this is the place, as you can see, where the market picked up. All right, so that's an order block, market going up. Anywhere where the market is pushing to the upside, you see this is where the sideways market is, and then we've got a push going up. So that zone and a push going up, that zone and a push going up. So that's that. All right, so this is how the market went up. So let's take a look at Thursday, Friday. We can also take a look at these days, but Thursday, Friday were the days when we're looking to go up from the lows, right? So let's take a look at Thursday. Let's come to a 15-minute chart. Come on, where is the 15-minute chart? Here we are. All right, so this is Friday and this is Thursday. All right, so in the video I did say this is not a bad place to buy either, okay, because that's the closing opening price, and that is the low. I think, was it the low? Previous days, yep. Okay, so previous days low is there, okay, and that's a demand line. All right, that's a demand line, and let me refresh this. Okay, there we go. All right, so that's where we're at. So Thursday, as you can see, market opens up here, already starts to push up. But where does it buy again? At the trading hours, look where it's buying. Okay, there. All right. And New York, as you can see, just beautiful push to the upside. I said Friday, this zone was good. And I did say if you find direction, you can follow it through first to there and then to there. So if you follow that through, great. You can see it in the video as well. And yeah, and I did say 10:55 to closing is a target. All right, on Thursday, and that's your 10:55 bar, and that is your closing. All right, so all honky dory. Friday, if you wanted to buy, you could have only done it from a retracement, okay, because we don't like to buy the tops. This is where the market bought. Why? Because that's where Asia bought, London bought. Obviously no buying really here, simply because you're just, too far out, okay. Plus there's a gap down here. Now I can get rid of this. This is over. This is over. By the way, I am going to do another video today. I will publish it later on. It might be good for you to watch it. If you are a member to the Global Trader Club, definitely watch it, because I've done a 5-step protocol which I added to the website. And I want to talk about that, because next week I'll be calling the shots according to according to our timing analysis, and we're just going to follow the 5-step protocol. Easy as that. I always have things in 5 steps, because anything more than a handful goes to waste, right? So 5 steps should do anything if you're going to get something done. Let's take a look at what else I have. Euro dollar Monday, Friday. Let's take a look. Euro dollar. That's good to see. Euro dollar. All right. Monday, Friday. Beautiful. Okay. So this is nice to see. If you did your goodbye kiss, is this a goodbye kiss here? Yes. Where? There. All right. So that's the goodbye kiss, and that's the zone. All right. See, that's the zone where the market sold off. That's the bar causing the breakout. And it taps there. So let's take a look at Thursday and Monday. All right. Because let's see on Monday, because Monday was a trading day. So let's go into Monday. And this is your Monday, right? So what hours did I have on Monday? So I had 1:45. Let's do it from scratch. 1:45. 1:45 is there. Okay, remember, we want to go to the upside from here. 7:55 to 8:20. 7:55 to 8:20. Now this, as you can see, pushed the market down. This is good, because you don't want to be buying when the market went up. Okay, so why do we have these hours, and why are we timing the market, right? So I want to buy at a good price. When's the next time? 1 o'clock is the next time. So let's see, where's 1 o'clock? Oops, this is 1 o'clock. Now that's good, okay, because the market going sideways pushes back at the trade hour. Now we've got another trade hour going to the upside. Lovely jubbly. Until 4:30, and then I've got 8 to 8:20. Where's 4:30? Oh my goodness, that is 4:30. So this is the place to cover your trade. 8:20, market retraces into 8:20 right there. All right, and that's the beginning. So if you think about it, market starts to pick up. Remember, we targeted that zone. Okay, I said this is the zone we want to hit, and then you get out. Okay, you got to take your profit. Why? Because that's a breakdown. Okay, so we've got a bearish mode here. All right, and on the weekly, we still have a bit of room to come down. Okay, it looks like. So we'll see how that pans out. Overall, that's it. If I wanted to take a look at Thursday, so let's see, because Thursday was also trading day, right? So if you wanted to trade on a Thursday, let's see what hours worked good on Thursday. Well, look at that. 1:35 Thursday. 1:35 on a Thursday. This is 1:35 on a Thursday. All right, so market going slightly to the upside. 8:25, 8:50, 8:25. Whoops. 8:25, 8:50. Okay, this is a bit in the middle of nowhere. Why? Because that's a high. Look, you have to check the highs, right? So that's the previous day's high of the day. That's the day before. Okay, that's the day before. Let's get my head out of the way here. All right. So as you can see, it's all like, if you're going to sell, you're going to sell on the highs. If you're going to buy, you're going to buy on the buys, And on Thursday, What else did I have? 11:50, 11:50. Oops. This is 11:50, so market breaks down. This is good to see. 11:50, and then what else do I have? 6:35, 6:35, 6:35. Market pushing down. 7:25, 7:55. So obviously, that's. Let's see what that is. Let's get rid of these, right? 7:25, 7:55. That's your 7:55 there. All right, 7:55 is there, and that is bingo. Okay, from here where we're going to 9:10, 10:55 to closing. 9:10. That's your 9:10 there. So market going up. So this is where you cover the trade. Closing 10:55 to closing is your target. That's your 10:55, guys. 11 o'clock. 10:55 is on that bar. All right, so that's all honky dory. Let's take a look at the next one. Let's take a look at Bitcoin. Let's do BTC. So want to look out for Monday, Thursday, Saturday. Beautiful. This is nice to see. Monday, Thursday, Saturday, just like beautiful. Thursday, oh lovely. All right. Boom, boom, boom. Remember, we're going to the upside. That is just beautiful. I don't think there's anything to say here. Let's take a look at Thursday and Monday. So Monday market went up. I did say today we should go up, okay? And we're still targeting that 50 to 37 or even all the way up there because of the gap, right? Which is fine, okay? But let's see. Oh, let's do Monday. Let's make this a little bit bigger. Monday, come on. All right, so this is Monday. Now look at Monday. All right, so this is a bit tricky. All right, market, what would you have done on Monday? The only thing you could have done is wait for a market to close gap, and that would have been minimum here. That's your goodbye kiss, but obviously what I like to see, what I like to see is this kind of a gap closure, right? This is what I'd like to see. Coming all the way down there, all right? And that really didn't happen, okay? But look at what happened. That is still closing the gap there, okay? Because it's a 15-minute chart. And then that's a trade hour market going to the upside. Here, I would not have done anything. Why? Not a high, not a low. Our bias is to the upside. So the only time you want to be buying is somewhere, like on a line or like, somewhere where they picked up the pieces again. Okay, if it's not on a line or if it's not back retesting or it's not at a good place, then you're just risking. So why bother risking, right? So that's the only thing you could have done really was here if you were open to trade that. And Monday though, our bias was to the upside and the market did go up. Now let's take a look at Thursday. All right, I'm going to move this out of the way. As you can see, the market did come into that zone afterwards, closing all of that and then becoming a resistance. But let's go to Thursday because the next day was Thursday. Here we are on a Thursday. All right, so that's Thursday. And let's get rid of all the lines. So we'll put fresh lines in there. Okay, so here we are. Let's get rid of that. Let's just do things properly. Here's Thursday, all right? So what did I have for Thursday? 135. 135. That's your 135, ladies and gentlemen. And I've got 825, 850, 825. Now this is good. 825, 850. Look what's happening here. All right. Market breaking out. Now remember, our bias is to the upside. Like, we're going up. All right. Why? Because Thursday the market came down. So I want to go up. All right. So let's do that. And then 11:20 to 12. Obviously no buying up here unless you know what you're doing. Okay. Now New York comes in. All right. So this is New York session. Let's see what I've got. 635. 635. This is your 635. And I've got 725. 725. 755. That's it, guys. And market goes to the upside. All right, so that's just beautiful going to the upside. And you could have been okay here. Why? If you do your technical analysis, if you took technical analysis from me in the intradays, you know where you're getting in. All right, well, gap closure, nice and tight, matching to the hours. Beautiful. All right, so, and that's basically it. All right. Remember, what we want to do is match the time to the technical analysis. So I don't want to be doing, all kinds of mumbo jumbo at any time. I want to do all the trading when the time and price, get together. Otherwise, you're increasing your risk. Why are we doing time and price? So we can reduce the risk, and we know when to trade. Okay. So if I know when to trade, I'm prepared in advance. I don't have to do all this running around mumbo jumbo stuff. And that's that. Okay, what did I say for shock days? Do I have a shock day? I recall having a Saturday, Sunday shock day. I don't see any shock days on Saturday, Sunday. But look, Saturday the market did push up, as you can see, right? And Sunday we're not finished yet. So the market is still going to the upside. Now, you don't have the hours here because calculating the hours on the weekend manually for the weekend is something I don't do. However, as you know, I'm going to be putting the Cycle Edge software output into the members area. Then you'll be able to see asset specific hours. Okay, let's take a look at SP500. Right, so here we are. SP500. Now with the SP500 at Wednesday or Thursday. Let's check it out. Alrighty. Just bear with me. Okay, so let's carry on. SP500, right? So what I have Wednesday or Thursday. Let's check out the days first. Here we are, Wednesday, Thursday. Now remember, guys, Wednesday, Thursday, I did say we could kind of go up here. All right. And I did mention a few targets. I think I should mention like one or two targets. Was like, probably that would have been the first, and that's the second there. All right. So I also did say Friday routine, but Tuesday to Thursday, a peak. All right. Peak can also be a bottom. All right. Don't think of peak as a price peak. When you're looking at pricing, when you're looking at vector days means like the power behind it. That's what it means. Vector is a force, right? So you want to be, so for example, when I say it's a peak day, it's like, energy's peaked out. Okay, so don't take the vector days as it's some kind of I'm going to, push to the, I don't know, to the moon or something, right? But I did say Wednesday, Thursday. So that's Wednesday and Thursday, guys. All right. So Wednesday, market comes down, makes a low. It's in the zone. All right. I marked this zone, remember? It's in the zone. Why did I mark this zone? Because, because this is the one that caused the breakout. All right. causing a breakout, coming in Wednesday, Thursday. Beautiful. So go long from there on Wednesday, Thursday. Let's take a look at the hours. So we want to know when the market came to these hours. I'm just going to get rid of those. Too many lines are not good. So let's check out Wednesday and Thursday, right? So we're looking for a price. And on Wednesday, it didn't get there. I mean, like even in closing, it didn't. But let's still put the hours, all right? Because remember, what we want to see is I want to get into the trade when it comes there, right? So that's going to be like, what price is that? 7,248, all right? So 7,249, let's say, or 7,250. So what would you be doing? So you say to yourself, all right, 7,250. All right, this is the zone. This is where I want to get in, all right, essentially. So, okay, and this is a place where there was a bit of buying, right? So that's nice to know as well. So fine, what do we do? Let me also refresh this. So the market didn't get there on a Wednesday, but let's still check the hours. Let's not be lazy. So indices, I normally say trade the US hours, but you know, let's do it anyway. Let's do, what do I have? 635, 250. Let's just do it quickly. 250. 7 o'clock. 8:35 to 9, so let's do 9. Let's do, then I had what, 10:35. That's your 10:35. Okay, let's make this a little bigger, shall we? I'll just come back here. And then what, New York, 6:20 my time. Remember, the time is UTC +3, guys. 6:20. That's your 6:20 there. And then obviously, yeah, so that was tricky. 9:35 is the other one. 9:35 is there. That's when the push down happens. And it takes us all the way there, look. All right, so the market came into that zone, which is fine. If I was to do this for pricing, which would be logical, then I've got a stop sweep here. And then now Thursday. What hours do I have on a Thursday? 135. That's your 135. That's the price zone. Market touching it slightly afterwards. Let's see what happened at 8:25. This is your 8:25 here. All right, there. And from here, the market's going to the upside. Then I've got 850, right? 825 to 850. That's your 850. So the market pushing up from here. Okay, nothing like really great because we're in the middle of places, right? That's a low, that's a high, you know. If you're going to buy, you're looking for something like a pullback, then, you know, you want to go up. 11:20 to 12 o'clock. Well, this is your 12 o'clock, all right? So from here, look what happens. Market pushes down. Where to? 6:35. We've got a 6:35 somewhere. Oh, yes, I do. That's your 6:35 there. And I've got 7:25. 7:25 to 7:55. That's your 7:55, guys. So even if you entered around here to go long, okay, you should obviously need to put your stop loss below there, but you know, that's pretty good. All right, pretty much 1 bar stop loss. Target 9:10, 10:55, 9:10, I'm thinking. There, that's where you manage trade. 10:55 to closing. That's your 10:55, guys, and that's your closing. All right, so trade day, trade hour, bingo. All right, so far so good. Let's take a look at Dow Jones, right? So you can take a look at the hours, right? I give here are for all market conditions. So whatever you're trading on those hours, you just match your technical analysis, right? And if hours match your technical analysis, you go, okay, so this is like time and price, bingo. So intraday timing is, it's something really unique. A lot of people ask if that's GAN. It's not GAN, it's Marty Maidan. I do use some GAN, but there it's all Marty Maidan. So let's take a look at Dow Jones. We've got a Wednesday, Thursday shock day, Monday, Tuesday trade day. Let's take a look at Monday, Tuesday. Oh, nice. Monday, Tuesday, I did say you could go down right into the box. Again, look, very, very simple technical analysis. Because we know the trading days and the trading hours, it's just like simple stuff. You just draw two lines. Does it match a trade day? Yeah. Look for an hour. Does it match your technical analysis setup? Yeah. Then that's it. That's your bingo trade. So look, I've marked that in before. I said we should come down here initially. I mean, later we're going to come down here, but this is the initial stop. That's the first bus stop, let's say, right? And then the market going up. Now remember, there's something interesting. Indices go together, right, don't they? So if I had Monday, Tuesday on Dow Jones, right, Monday or Tuesday, and I had Tuesday on NASDAQ as well, then I'd be thinking to myself, you know what, if I'm going to sell, Tuesday might be the better day because I've got NASDAQ and Dow Jones both on a Tuesday. And then I've got Wednesday or Thursday for SP 500. So market comes down on a Wednesday, Thursday, I'm thinking SP 500, yeah, from the low to the upside. So if you were trading Dow Jones, you'd be okay to use SP 500 date as well because your setup is the same. Look, it came into the same zone. I put these zones in all the time in the daily videos. You just have to follow through. You should be all right. So let's take a look at the hours on a Thursday. Or sorry, Monday, Tuesday, right? Because they were the trading days. Let's take a look at Monday, Tuesday. First of all, let me just see if I'm in the right week. So that's Friday, Thursday, Wednesday. Look, I've already put that there. Look, Tuesday. And this is Monday. Oh, look at this. This is really good. Look. Monday, it makes a high, sells off. Let's check out the hours. Why is this okay? Well, for one very good reason, because that's where they sold before. You see, that's a supply zone, right? Market going sideways, right? Demand supply zone and selling off. So market goes up, fills in the gap, stop sweeps everybody. Let's see what time they're doing that in New York. I've got 4:30 in New York. Let's see if they did anything crazy at 4:30. That's your 4:30, guys. They did that right on a 4:30. Look. That's it. So, like another bingo trader. And then I've got 8 to 8:20, and then you just have to sizzle it down into 8:20, I guess. 8 o'clock, 8:20, and that's it. All right, so that's your Monday. Let's take a look at Tuesday. All right, so here is something I put in the oven earlier. Remember, we want to sell, right? The bias is to the downside because the market is up. So you want to sell Monday, Tuesday, right? Look, the market comes up into the same place again, right? At a trade hour. Let's take a look. I'm just going to double check. 10 past 4, that should be, all right? It's 5 o'clock. Did I have I had a 5 to 5:15. 5 o'clock to 5:15 selling exactly at the same spot. That's your 5 o'clock. That's your 5:15. I also had a 3:55 to 10 past 4. 3:55. 3:55 is there. And 10 past 4 is there. Let's say you sold here. All right, let's say you sold, that closed, and you sold here. What would you have done? What would you have done? The question is, what should I have done? You needed to put your stop loss definitely above there. So the stop loss needed to be above there. Why? Because that's the high it did on Monday, and Monday was a trade day. Plus, it could do a stop sweep on that to come down. All right, so That is how you need to trade that. If you wanted to be a bit more conservative, you could have waited to chuck a U-turn, right? You could have done a U-turn as well. You know how to do a U-turn if you took it from me. If you took technical analysis from me, that is. All right, so then that's all you needed to do. Just wait for the U-turn and then bang it. Going all the way into trading hours, coming into Tuesday, let's take a look at the daily. And that's your Tuesday, all right, closing gap. Wednesday pushing down and coming to the target on the Thursday Asia session. And you guys already know what happened on Thursday, so there's not much to talk about. All right. Same thing as SP 500. Let's take a look at NASDAQ. Now, NASDAQ only had as a trading day Tuesday. All right. And then we had Tuesday, Wednesday, Thursday for shock days. Remember, Wednesday and Thursday we had shock days for Dow Jones. Let's take a look at that. Let's do Dow Jones. We forgot to look at that, didn't we? SP 500 was Tuesday, Thursday kind of peak. Dow Jones had a Wednesday, Thursday shock day. Let's see if Wednesday, Thursday. Well, Wednesday, Thursday shock day. All right, so nice and easy. All right. That's like all good so far. Touch wood. Let's see how NASDAQ went. NASDAQ, so we've got a Tuesday trade day. All right, so let's do. That's your Tuesday trade day. Now, I did say, look, this was an initial target, and then I outlined that because there's a gap there, okay? And that's the cause. I'm going to take this down now, okay? Because that is the cause for a breakout. Ideally, a better spot is there. All right? And let's do that. All right, so we should hit there as well. Okay, now just note we closed below that, so we want to sell when it comes up next week. But think about it, Tuesday we're going in there, and now we've got Tuesday, Wednesday, Thursday shock days. Look at the Tuesday, bang bang, and down in a Wednesday it's a shocker, and that's the kind of stuff we want to know in advance. All right, so the hours you guys already know, so you can just check them out yourselves. And that's it. Okay. Now, in terms of the swing day periods, because premium members are paying for them, so I don't want to tell you what's happening in the future. But I already did a few videos, and I'll show them as well as we go forward. But and that's basically it, guys. All right. Yeah. That's it. So for the members, if you're in the members area, just a friendly reminder now, download that 5-step protocol from the Start Here page, right on here. So once you're in the Start Here page, then, all right, you can download this, the 5-step checklist, and then just use that for a protocol, all right? And that's basically it. I'm going to do another video, like I said, regarding that. But good luck with your trading next week. I've already posted everything for you guys until the end of the month. And next weekend, I'm going to raise the prices up a little bit more. The reason for that is because I'm going to include more information, including asset-specific information. So that's why. All right. So more stuff, obviously. A bit more of a price raise. If you've already signed up, though, you'll continue as is because Stripe's going to charge you according to what it charged before. I'm thinking, okay, if I'm not mistaken, not 100% sure. In any case, have a good day and a good week ahead.